Now, do you want me to tell you the truth, or do you want to stick to that what you've been doing for years and years? And by the way, do you know a time comes when you need to unlearn what you had learned to relearn new things? And let me tell you one thing, greatness is always made when you disturb your comfort. You know why? Probably I know this is a video that will actually, sort of generate a lot of emotions and what have you, just because your norm, your long-term known information has been disturbed. It's like somebody showing up today and tell you, you know what, you've been lied to. This is not a hand, this is actually a stomach. How would you even feel about that? It's actually kind of rude. Okay, now today I'm going to share with you rentals as we know them. They may not be the best investment, but you can try some other things. Am I saying that you should not invest on rentals? No, I'm not saying that. I love them. But by the way, my favorite investment is actually real estate. But I'm going to tell you one thing. It is not the best investment based on the time and when you want to acquire it. You know, people tend to think like the moment you get money, the only thing they're supposed to be is rentals, is everything. I don't know why people do admire. I don't know whether people do admire the landlords or they envy landlords on what have you. I mean, I think it feels good when you go and ask somebody for the, rental income and money and whatever. The thing is this. I'm gonna share this video with you step by step. I ain't gonna speak fast. I'm gonna take my time, explain to you step by step why or what I mean by exactly that. The only thing I need you to have or do with me is just go ahead, subscribe to this YouTube channel. Why? This is kind of the videos that I upload each and every day. And if you don't wanna miss any of it, if you subscribe, you turn that notification bell, you like the video, and make sure you comment on the comment section. Put your views on there. Ain't gonna block nobody's view on the same, okay? This is a democratic country. Let's get on the business, okay? The point number one, when I say rentals may not be the best, or actually it's no longer the best investment that you can ever have. See, when we use the term best, this is a superlative. I remember my English used to tell me that. I don't know whether it's a superlative or comparative. It's a superlative when you compare variety of things. So when you say best, it means that it actually stands on top of all the investments that you have. If you compare bonds, bills, businesses, blah, 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 all those kind of things, the rental stands on top. It is no longer the case. We are living in 21st century. Things are changing. And let me tell you one secret. Why am I saying that? Because we have other alternatives. And picking simple or one example of investment, just like the rentals, for example, and you throw your money into it without comparing what you're getting out of that rental income vis-a-vis that what you'll get from, say, you were to invest in a different thing. That is not actually, you cannot say you pick the best option. It's like when you want to marry and you just pick one lady from no one else. You cannot say you have the best. But when you pick one lady out of the 100, then you can say, hey, or pick a gentleman or a man or whatever the thing it is to you. Now, the thing is this. When we say rentals are not the best in terms of the investments, yeah, this is what we mean. Rentals, they are not really meant for growing. They are not meant for growing money. They're not meant for growing. At least I'm speaking for Kenya. I know much about this country, my friend. I've been here for over 30 years. I've been here. So I know it. Probably somebody watching this from the US or the UK and what have you, they might actually crucify me on the comment section. But I'm telling you, rentals is not really a way of growing money. Especially this is the language of the youth or the young guys. It's a way of actually doing what we call safeguarding. And please, in your life, learn to understand these two things. Means differently. Do you get what I'm saying? There's a difference between growing your money, growing, and safeguarding it. So rentals are more of safeguarding it. That's why you pick, say, for example, 6 million in Kenya will build you some couple of one-bedroom unit. I'm assuming that you have a land already. Maybe you can get yourself some like, I don't know, 5, 6, 7, let's say just say 7 units. 7 units. These units, you've accumulated or you've actually used, say, 6 million to do that. The rentals here in Kenya gives you a period of, say, 12 to 15 years. 12 to 15 years to do what? To break even. To break even. What does it mean? To return back. To return back your money or your initial capital that you had used to invest in that particular area. Okay. Now, the question is this. This is how people argue. People say rentals, actually there is you cannot. Go check this one. And I don't want you to be an assumptuous person. You cannot convince me that the rate at which the rental income increases in a year goes beyond even 5% in Kenya. They do not. Rental increase in Kenya plays even below 5%. Let's even say, okay, fine. Don't reason as an investor. Reason as a consumer. when you rented that house, how many years ago? Thank you. You have lived in that house for the last 5 years. How much did you pay when you entered that particular unit? 10,000. Thank you. When was the last time that your rent was increased? Oh, no, has not even been increased. It's the same 10,000 for the last 5 years ago. What does it tell you? Where is the percentage of the rental increase in terms of how much is it increasing? It is not increasing. By the way, I know people who can go somewhere and live in a particular unit for the last 10 years. Rent has never been increased. And if it has ever been increased, maybe with 1,000 or 500 Kenyan shilling, it has the thinnest margin. The only thing that increases in that particular place, not the structure, it is the land itself. And do you know how much the land increases here in Kenya? An average of 7%. 7%. Yeah, it can go up to say 9% or 9-ish or something or so. But the average rental, or rather the property increment in Kenya, is actually at around 7%. Now, here is a very young guy who have actually secured a good job. You're working abroad and then boom, there you are. You go build the rentals here. You want to have yourself some rentals. Unless, before I even say anything on this point, unless your cash flow is good. Unless if you have other businesses. For example, these are the exemptions of this video that I'm making. And that's why I want you to approach this video of mine with utmost intelligence. Because if you do not, you won't get anything. If you already have a business that in existence, you're employed somewhere, you're having what we call the golden handcuffs. I'm going to talk about that in the future. What are golden handcuffs? You're actually having a good cash flow. Cash flow is coming in. You have a successful business that is bringing cash flow. And then you're like, you don't know how long this business will last. Then you can take that money, invest in rentals. Beautiful. I support you 1,000,000 times. You're working abroad. You're earning good money. You are At least you are saying, hey, you know what? My cash flow is good. You can go ahead and build rentals and what have you. Amazing. I support that. So that you can look towards you coming back home and rely on those rentals. So if your aim is to return back your initial capital, may not be the best option. I hope I made a sense out of that. Okay, now this is what happens now. When I say it actually takes 12 to 15 years to actually return back or break even your cash, and we can do a very simple mathematics. Let's pick an example of somebody who has 10 million. Okay, there is a bond that actually has closed less than 2 weeks ago here in Kenya. Actually, it's 1 week. Yeah, it has actually closed. That bond is going for 17.9%. 17.9%. Let's just give it at a rough rate of 18%. Okay, because we even had an 18.4% in this year. This is 2024. I'm making this video of 2024. Okay, in case you're watching it in 2075. Now, the thing is, this 18% is what you're getting per year, and there is something called the rule of 72. The rule of 72. The rule of 72 says, if you want to know how long it will take you to break even or to get back the money or to double your money, you take the rule of 72 divided by the percentage. For this case is 18. How much will we get there? Is it 4? 4 gives you 32. Yeah. Is it 4 years? So you're going to need yourself 4 years. And by the way, you can do those calculations. Don't want to get it wrong. Yeah. It's 32, blah, 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 blah. Yeah. 72. So you need 4 years to get back your money. So if you invest your 10 mic, in this bond, and this bond was actually going for 6.5 years, and I want you to go with me, please. Go with me slowly. Because in the world of finances, you need to be smart. So if you pick this bond, and this bond was going for 6.5 years, with a rate of 18%, okay, fine. I know it's 17.9%. That's a 0.01 or whatever. Let's say maybe this goes for 4.3 years. Okay, you're gonna get back your 10 million. What do I mean? Like, you will get your initial capital of 10 mic and another to double, to 2x your money. So in a period of 4.3 years, you'll get 20. So somebody takes this 10, goes and builds the rentals. Assuming you don't have a land and whatever. So 10 million, this is what will get you. 10 million, you can go buy yourself a very nice parcel of land somewhere, a very premium area. You can buy maybe, let's say, at 3 million. Okay, 3 million, you are remaining with 7 million. Then you build this. Of course, you cannot do the slab and the story one. You can just do the ground one. You buy it at 3 million, very prime area. Then you go ahead and build the rentals. Maybe 7 million will get you like 8-ish. Let's say you get even 8. Okay, you get 8 units. That 8 units, let's say even rent it at 10,000. Okay, let's you get it at 10,000 or 9,000. Let's say 9,000. So 9 times 8, that's 72,000. Let's even call it 10,000. 10,000 multiplied by, I want you to get something here. 10,000 multiplied by 8 units. That is 80,000 Kenyan shillings per month out of the 10 million that you've invested. Now, okay, let's see now how long will it take you? If you're earning 80K per month in a period of how long? 1 year. How much will you get your money? So it is 80,000 multiplied by 12. That gives you what? 96. That's a 960,000. So you need like a couple of 960,000 multiplied by 10 years. That's like 9.6 million. So you need like over 10 years. You need like around 11 years there. You need 11 years to get back your money. You need 11 years. And do you know what I've just done? I have assumed a lot of things. I have assumed you don't pay taxes. There is a rental income tax. I don't know, there is other taxes that you have to pay. Land rates you have to pay here in Kenya. You know, maybe probably you've given that property to an agent. There is a deduction that they make. Probably out of the 80,000, what will come to your pocket is around 70,000 or 75,000. 5,000 is gone minimum. So you're gonna need yourself. Obviously, when I reduce that money, it's no longer 11 years, probably 12 years. But you see, somebody who had invested in this bond in a period of 4.3 years has gotten back the money, 10 million, and another 10. This means the guy, if you go for 12 years, the guy has another 8 years. So meaning this dude who got themselves into the bond can actually invest 4 times than you. So by the time now all of us we are clocking the 12th year of our investment, that's the time you're getting your 10 mic, somebody has made 4 or 5 times of that. Now tell me, where will you go in terms of the investment? Okay, if you are old, if you're watching this video at 50, I have no problem. You can go with the rentals way anyway. You see, I think for me, I would say, yes, rentals, they do give you cash flow. And at the same time, it give you that sense of pride, like, hey, you know what, you can physically, and I think that's why it's called real estate. You can actually see it. Oh, it's there. Ah, amazing. You know, there is that ego, there is that sort of aura that gives you, be like, you know what, this is my property. You know, by the way, I don't know whether you know this. You know, you can't show somebody you own a bond. Like you can be, yeah, I own a bond somewhere. Yeah. Yeah, I own it. It's like, and you know, we need to advance with time. And some of the wealthiest people on earth, they cannot even show you what they own. If today you pull the Mark Zuckerberg, the owner of the Facebook, you tell them, hey, what do you own, my brother? How can they show you? They pull up their phone and show you, yeah, I own this app. Yeah, and this one and this one. Okay, but they're like, okay, what's the physical thing that you own? You get what I'm saying? You see, we need to appreciate the fact that time are moving. By the way, it will be wise. True, I would support that 1,000,000 times. It will be wise. Okay, you want to go to the rentals way? Amazing. I support you 100%. You have 10 million? Amazing. So get half of that. 5. Okay? Or because rentals is actually a capital intensive, how about then you take 3 million, remain with 7 million. So that you take 1.5 million plus the other that you remain, you go build your rentals. The 3 million, throw it in a bond. If you throw it in a bond, then in a period of 4.3 or whatever the period it is, you have back your money. You get what I'm saying? So by the time now you're investing several times, by the time the 7 million that you had invested into a real estate, by the time it's multiplying itself, or by the time it's 2xing, or it's actually doubling in 12 years time, it is actually, the other one is actually catching up with the same number. Like you've actually killed 2 birds with 1 stone. It is good when, the other thing, when you get yourself into the bonds, the bills and what have you, the MMF, it doesn't have a lot of moving parts, you know. You don't have to call nobody, there is no vacancy. And also, do you know one thing? In these rentals, I've assumed for the next 12 years, your houses or your units have never been vacant. They have been okay. There's a lot of things to assume in this rental thing. I know the question you're asking, Joseph, why are you telling us now? What are the dangers or what are the disadvantages of the bonds? Can government collapse and whatever? If government collapses and it defaults, if the company or the country goes down, even that rentals that you have or the money that you have in a bank, well, probably the rentals may not be touched, but the money that you have in a bank, it actually goes down. True. You know, I usually have these people who say, you know what, Joseph, I cannot invest because I don't trust this government. It's not an issue of trusting the government. You're not an investor. You know, I would rather have my money in a money market fund than having it in a bond. But you forget where the money market fund companies invest. It is in bills, it's in bonds, it's the FDS and what have you. It's like saying, I don't want to risk this money. Just take it and risk it by yourself. But it's still your money. You get what I'm saying? And that's why the insurance companies come here and they sell you an insurance, whatever they think it is, and then they wrap it to the media of investment. No, this is an investment. It is not. Insurance are not investments. Insurance, the insures what makes us money. Insurance don't make us money. Insurance, they don't make us money. They actually insures that what makes us money. Please, be smart. And I always tell you, in the world of finance, whenever you're making a deal, there is always a fool. And if you can't see any, you're the one. Never forget those words as long as you live. You need to be smart. You need to know what is going where and why. And that is it, my submission as far as the rentals are not really the best. Did I say you should not invest? No, please. I have to leave this. As much as I'll write a disclaimer on the description of this video, I have to leave it here in a verbal way. One, I did not say that rentals are worst investment. No, they are greatest. It is, I love it. Are we together? But when to acquire them and how to acquire them, that's where we draw the line. Just understand, what do you need now? If you're watching this video and you're 50 years old, you're 60 years old, please don't even think about anything. Go pick yourself some parcels of land, build yourself some rentals, get some few coins into an MMF, get some few coins to a bond, go ahead with it. But if you're at your 20s, for God's sake, it's the first time you've gotten your million shilling, please, you need to multiply that money. Of course, without violating the first principle of losing your money. Be smart. Move along with it. And once you do that, guess what happens now? Because you need to multiply your money. You need to grow it before you start safeguarding it. Wow. I hope I've delivered this message in the slowest form so that you can understand everything. And if you're watching me for the first time, this is Good Joseph. And guess what I do? I post anything and everything related to finances. I'm literally this guy who comes after you get your salary and tell you, hey, you know what, John, don't consume everything. Yeah, even the Bible calls you a fool if you devour everything. Make sure that you put your house in order as far as the investments are concerned. That's me. And by the way, you're open to leave your comment on the comment section. Thank you very much. Oh, before I even go, if you would like to have a hold of me or get a conversation with me, my number is always on the description of this specific video. Thank you.